We're back for the second part of our conversation on this week's podcast about things that advisors wish every investor knew. So we're going to go through a few more of these topics this week on Phil's Tax Hacks and Other Retirement Facts. Welcome into Phil's Tax Hacks and Other Retirement Facts with CPA and personal financial specialist Phil Putney. Now let's get rolling with today's show. Welcome into the podcast. Thanks for hanging out with us, everybody. We certainly appreciate your time as always. And hopefully you caught part one of our three-part series on things that advisors wish every investor or client knew, or at least understood a little bit better. Not to say that you have to know this stuff to make things easier or to work with somebody. It just might make the the conversations smoother, I suppose, maybe, or a little bit more
right.
productive. But you'll get there eventually, right, Phil?
Yeah, to me, I think the point is not so you understand us. It's more so you understand maybe when we're asking certain questions, kind of where we're coming from, right? Because
okay,
as an advisor, we're approaching it probably differently than you, which hopefully you would expect. I mean, that's what you hired somebody for. That's a professional, that's an expert in this field, because we've seen many people go through retirement. We've helped many people go through this process, so we know the ins and outs and what to expect and kind of the ebbs and flows, so to speak. You as an investor looking at retirement, I mean, this is your first time, hopefully, hopefully the last time. You're not having to re-retire at some point in the future. So it can be a difficult and kind of a strange process that you go through as you're trying to maneuver this retirement path and then understand, why are they asking that? Or what is, I don't understand that. That's not what I've always done. So
yeah.
So hopefully this helps give a little bit of insight into, from our perspective as advisors, kind of how we're approaching this and why. So
that's a great point. No, that's a great point. A great way of breaking that down for sure. Well, let's dive into a few more of them. So let's get all emotional up in here, Phil. I'm getting choked up just talking about it. But no, emotional financial decisions are emotional. There is no way around it. And that is okay. I think sometimes a lot of the message comes out that don't make emotional decisions about your money because it never ends well. It's okay to be emotional about it because it is an emotional thing to an extent. You got to be a little careful though.
And that's where, again, an advisor can help, because the bottom line, finances are emotional, very emotional. But we're not trying to take the emotion out of it, right? We understand that, and every advisor is emotional with it too. I mean, it's just part of who we are as a human being. We make emotional decisions, but our goal as an advisor is to help you understand, first of all, that it is emotional, but then maybe step back a little bit, take a breath. Let's look at the big picture. And this is where having a plan really helps, because it can maybe help temper those emotions and help you deal with them more at the time, going through like the election or anytime you have volatility or uncertainty in what's going on in a market. It's like, okay, well, let's step back. We've talked about this. We're going to have times like this. It's just part of investing. It's part of life, but that shouldn't change the plan, right? Because you should be able to have built into your plan those ebbs and flow, knowing that this is going to happen so that it doesn't have to change your plan. If that affects you emotionally, then let's walk through why that is and maybe some ways to help with that. Maybe stop watching the news, right? Maybe the emotions that you're getting is from your source of information, which, I mean, that's the reality today. I mean, it's hard to not get just inundated with information from all sides on everything. So you've got to kind of temper that back to say, okay, well, what really matters, right? Is what I'm hearing going to make any difference? Or do I have to, and the other part with emotion too is trusting your advisor, right? Do you really trust them that, hey, they've gone through this before, this is what they do? And that doesn't mean don't question them, absolutely question them, because we don't want that to kind of linger out there, but just have that discussion. But our goal then should be to maybe help you walk through some of that emotions. And if at the end of the day it's too difficult, then maybe we need to make some adjustments in the plan. And that's part of that process too. So
yeah, for sure. I like that too, right? Like you want to be able to trust the person that you're working with. You hired them for that reason. Hopefully you vetted them out, did your due diligence. But of course you still want to keep your eye on things. And if you've got some questions, question
Totally.
them on some things. That's absolutely important. To quote Reagan, who was actually quoting the KGB, which I think most people don't realize, which is pretty funny: trust but verify, right? So,
Trust but verify.
uh,
Trust but verify. Yeah, and I mean,
hilarious
if
that was the case, right? Most people don't, there's like, it's
yeah,
a very American patriotic thing. Reagan said that. And it's like, well, it's actually the KGB's motto.
of the KGB,
But
and I mean,
yeah,
your advisor shouldn't get upset with you or question
no,
you questioning them
no.
or the plan. I mean, that's part of the
Yeah.
process. I always tell clients, look, I don't mind questions. I love questions, right? Because that tells me you're engaged and you understand and you want to learn, right?
Yeah.
And I'm willing to with my clients, I'm willing to teach and give them as much information as they want or as little. I mean, there's a certain level of information and knowledge that you need just to understand exactly why and how and what's going on. But at the end of the day, you've got to be comfortable. And if you're not comfortable, then let's have the discussion to get you as comfortable as you can be.
Absolutely, yeah. Phil's not the money police or the money Gestapo or whatever term you want to use. So, all right. So diversification, so understanding the true significance of it, right? Because it's become a huge
Yeah.
buzzword, and everyone throws it around, but it really is like, and it's multiple things too. Like, there's diversification of the portfolio, but there's also tax diversification.
Yeah. Diversification is a broad topic because it most commonly is thought of from the asset allocation, right? The stock bond at a really high level mix, that diversification. And that's important, but at the end of the day, even with that, understand what's the purpose of diversification? It's really to help blend and manage volatility, right? So that you can have those ebbs and flows. So the one is going up, the other one's going down to help kind of manage and keep the volatility at a certain level. I mean, that's the ultimate goal of diversification. But the same thing applies from the assets as far as the tax side and in which tax buckets they're in. And what the blend looks like for you is going to be maybe different than somebody else, what your diversification looks like. So again, this is where it comes back to there's not a one size fits all. The 60-40 from a portfolio allocation is a very
Hmm.
common kind of fallback for most retirees of, well, this is where I should be when I get to retirement. Well, yes or no, I don't know. We've got to look at your
Right.
scenario. What's your risk tolerance? Is that something you're comfortable with? And then when are you going to need the money, right? Because if you're needing to spend more of the money up front, well, then maybe that's too aggressive of an allocation, at least for that piece of the portfolio. So it really comes down to understanding diversification and what the intent is. It's to help in the investment side manage the volatility. In the tax side, it's to manage taxes, right? What's that blend of the tax buckets for you specifically? You shouldn't have
Yeah.
everything all in the middle bucket, the tax deferred, or all in the first bucket, the taxable, or all in the tax free. I mean, and a lot of people, especially in probably the last year, the Roth wave, so to speak, has really taken off, which I love. I love the fact that people are
Sure.
starting to realize and pay attention to it. But unfortunately, I think there's too many people jumping onto this thinking, oh, I've got to get everything in that third bucket, that tax free bucket, because I don't want to pay any taxes in the future. Well,
Right.
that's probably going to be the wrong answer. It means you paid way too much tax up front to get there. So there's the right
Very true.
blend, both in the portfolio, but also on the tax side.
Yeah, and of course, with the deadline looming as to the current tax rates that we're under, I think people are
Yeah.
pushing. There's an element out there saying you better do it now. You better do it fast. You only got a year and 2 months left to get it done before the tax code changes, and that is true, maybe, because we don't
Yeah,
know
we don't
what's
know.
going to
I mean,
happen.
yeah,
Yeah, they can make
yeah,
a
it could get
change,
extended.
and
Yeah. Who
yeah. So
knows?
and
I
and
mean,
we won't
we
get into
always,
that since we don't know
yeah,
the answer
that's
yet
a,
because we're taping this block of podcasts a bit early. So we'll see.
yep.
But yeah. So diversification, obviously, it's important, right? So in all facets of the strategizing, another piece that advisors certainly would love for people to realize is that having a professional on your team, just having a professional period, help you does not mean you have to be an Elon Musk, right? You don't have to be uber wealthy. You don't have to be a Vanderbilt or a Rockefeller. It's for working Joes just like myself and millions of others out there.
I mean, like I mentioned, everyone has those same components. You go into retirement, you've got certain sources of income, you've accumulated some money in various tax buckets. and you're going to end up paying taxes. And then you have a need for income. So how do you best blend those three together to maximize the income you're going to get and minimize taxes? And
Yeah.
granted, I mean, depending on your amount that you've saved in which buckets, I mean, there's certain limited things you can do. Not all strategies might apply. So they may apply to somebody that's a little bit has more resources available.
Sure.
But resources, again, it always comes down to um, resources don't really. I mean, that's not the end of the game, right? It's a matter of what do I need, and
Right.
then what income do I have? That's where then those resources come into play is to help make up for that difference. And because I get that question often when we're talking about, well, what should I have to retire? What's the number I should have? It's like I have no idea. Let's run your numbers because I don't know what you're trying to accomplish, right? I mean, is a
Yeah.
million enough?
Yeah.
Could be, but for some people, it's not even close because they're spending, an exponential amount of money that's not going to get them through retirement. For some people, other people, I mean, $1 million would give them a dream retirement that they can't even imagine.
The Tax Smart Retiree is your comprehensive guide to mastering tax efficiency for a flourishing retirement. You will find indispensable advice and actionable strategies designed to enhance tax savings, maximize Social Security benefits, protect against market volatility, and develop a customized retirement plan. To get your free ebook, click the link in the show notes of today's episode and download your copy of the Tax Smart Retiree right now.
I was going to say it's a weird animal right now because I think numbers get so distorted that in our mind, sometimes if you just it's just kind of sitting there and saying, I'm not a millionaire, so therefore I don't need a financial professional. But you be surprised as to how much you actually have in assets, in investable assets or in liquid assets or in just total net worth. It's really not that hard to get a little higher and realize I do need some help and I do qualify or whatever to work with somebody. And we'll hear advisors always say something like, as long as you have 200,000 saved for retirement or 500,000 saved for retirement or something like that, because they all have their different numbers as to where they work well within something. To your point earlier, you can't be a magician and build someone in retirement out of nothing. You have to have something, right. But it's not just for the uber wealthy.
Yeah, I mean, it's exactly. We can't make magic happen in the portfolio. So there has to be resources there, but I think most of us don't realize what we really have, in comparison, especially in comparison to the rest of the world, but even in comparison to the United States. I mean, if you were to realize, what you've accumulated and where you're at financially, most retirees are probably in that upper echelon of the financial world, and they don't even realize it. It's where, most people are blessed. So start with a plan, understanding, well, how do these pieces work with you or for you? And an advisor you're working with should be able to tell you, hey, really, there's not much I can do to help. Here's some suggestions. Or
exactly.
Is there something we think we can do? And that's how we work with clients. That's our first meeting with a client, is just to understand, well, what's your scenario? What are you trying to accomplish in retirement? What have you accumulated? What income sources do you have? Let's paint kind of a broad picture of what your scenario might look like. And then from that, I can let you know whether I think there's something that I can be of service to you and help with. And if not, then, I give you some pointers and hopefully get you pointed in the right direction. So.
Exactly. Yep. And that's the whole point right there, is finding an advisor, a financial professional that's able to help you at the time of life that you're in, because the time of life is going to change. All right. So another one is if everyone understood the importance of truly doing updates and reviews. I mean, there is a reason for that, because I saw an interesting quote on guy was talking about some financial questions, unasked questions to ask. And he said, but he wrote this article. He said, but takes on a different viewpoint for me, and I wanted to share it. This is the writer talking. He said it takes on a different viewpoint because he's dying. He has terminal cancer, and he knows he doesn't have a whole lot longer to live. And he said, so now these unasked questions or these financial questions take on a completely different shape. Imagine how you feel about things at 30, then imagine how you feel about them now that you're 60. They're not anywhere remotely the same. You might have a couple of topics financially at 60 that are nowhere near how you felt about things at 30. Well, now imagine what that might feel like at 90, right? And so that's the importance of a review, because every year that you're into retirement or every year that you age, your feelings about money and things are going to change.
And things change in your life. When we're working through this process with a client, I always like to describe it as in this case, kind of like a roadmap. I say, imagine you're retired now and you want to take the next 3 months and you're going to see all the national parks, right? So to do that, I mean, you got to do some planning. You've got to map this out and figure out first what's it going to cost, make
Yep.
some reservations, figure out the sites you want to see, do all that planning and strategizing ahead of time, and then start walking down that path. And I guarantee you, as soon as you start down that path, things are going to change. You're going to have a flat tire. There's going to be, the great ball of yarn that you didn't realize was there. Now you want to go see that. So you're going to have to make some changes in the plan. Well, that's part of the process. But you have to start with a plan to begin with to say, well, can I do it? What do I want to do? How do I get things set so that I can do this? But then start walking down that path and reviewing that plan on a regular basis as things change in the world. Taxes change, investments change, inflation changes. As your life changes, if something comes up in your life, I mean, to this, the point of this article, if all of a sudden now you have a terminal illness and your life expectancy changes, but if you're married, well, maybe that's a different scenario now for you as a married couple, because your spouse is going to be a surviving spouse and have dramatic tax effects in a short time. So all these different
Yeah.
things happen, and that's why you have to come back to that plan, not to say we're changing it, but to see, do we need to change based on all the new facts that we now know?
Yeah, for sure. I mean, it's a great point, and it was certainly an interesting way to think about things and stop back for a second and go, wow, yeah, that does kind of change some of these basic questions that we all find ourselves in the universalism that is retirement strategies. All right, final one, Phil, here on this episode, and we'll kind of keep this short, but the buzzword, and then now they don't want you to say it. Now they want you to say it, and it seems like it changes every other week when it comes to the fiduciary conversation within the financial services world. So I'll rephrase it like this. It's important to understand that you're working with a person who has the right set of credentials for the time of life that you find yourself in, right? So work with somebody who can truly help you at the phase of life that you're in, period.
I mean, at the end of the day, the advisor, whether they're this fiduciary or not, I mean, there's credentials and everything that go with that require that level of service, so to speak. But at the end of the day, are they acting in your best interest, or are they just trying to sell you something? I mean, that to me is what it comes down to, right? So it should start with a plan, right? So if they've got a plan that they're helping you walk through first, that has nothing to do with a product. A plan should not be product specific or product driven. A product is a tool to help make that plan work. So that's how I like to think of it. And I always joke when we're talking about this planning, I said, okay, imagine you're building a house and we're getting ready to put it together. You're not going to go to Home Depot, grab a cart and start throwing a bunch of stuff in the cart, right? Because, hey, I like this or that. I mean, that's, let's make that work. No, that's not the plan. Let's build the structure first, figure out how this plan works. Where do the walls go? Where's the bathroom? All the different components. Same thing with retirement. How does all this work first? Now let's go to the product side of the equation. So to me, an advisor that's helping you build that plan out first, now looking at the products, is going to be the better fit. They're approaching it more from your interest because they're helping understand and help you strategize to come up with the right plan for you. Now let's make the investments fit that, not vice versa, where you've got investments and how do I make that plan work with those investments?
Yep. For sure. And it's important to, again, vet out the person that you're thinking about working with, make sure that they're the right fit for you. And that's why so many advisors offer those complimentary consultations. Usually it's a 1 or 2 meeting session to see if it's the right fit for you, right? So see if it's the right fit for them as well. So if you need some help, as always, check the show notes of this week's description of this week's show notes. There's usually links in there on how to get in touch with Phil and how to get yourself onto the calendar. As always, if you've got those questions and you need some help, which you probably do, make sure you're talking with a qualified pro like Phil, who's been doing this a long time. He is a CPA as well as a financial specialist. So get yourself onto the calendar with the links below, or reach out to him at philstaxhacks.com. So make sure you subscribe to us on Phil's Tax Hacks and other retirement facts, and we'll see you next time for part 3 of our conversation about what advisors wish every investor knew.
Phil? investment advisory services offered through AFS Wealth Management. The content of this program is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. Investments and/or investment strategies involve risk, including the possible loss of principal. There is no assurance that any investment strategy will achieve its objectives.